Hi, everyone. Welcome to the HomeQuest show. Today, we're going to talk about a program that we're starting to use that is beneficial to a lot of people. And
Right.
it's kind of a little known program, so we want to make sure you're aware of it. And it sounds too good to be true to be able to buy a home with zero down and no closing costs. But it's real,
It,
and we've helped someone
it's
before.
it's a very unique program, and it's not always out there. Not everyone knows about this, and
Yeah.
so we want to get the word out.
Yeah, and there's only nice thing working with a broker is we have a lot of options, and there's only a handful of lenders that even have this program
Correct.
available. But I guess the thing is the nice thing about this program is you do not have to be a first-time home buyer.
It has very few restrictions on it at all. That's what's great about it.
Yeah, so let's talk about it. Most first-time home buyers or home buyers today, they're not necessarily struggling with the income. They're struggling with all the other costs to get into the home. They can make the monthly payments, but it's the big upfront costs getting
Right.
into the home.
Right.
And we've got this formula here. If you're not aware, buying a home, typically there's a down payment, and then there's closing costs, which can catch people by surprise.
It can a little bit because you don't think about it. Everybody says, "Oh, a VA loan, zero down, FHA 3.5% down." You're not thinking about, well, there's title escrow, there's appraisals, there's lender fees, there's other things.
Home inspection.
Yep.
And just to answer the question, 'cause people say, well, can we get rid of those? Like, no, those are normal fees that you incur when you buy a home all the time. But there's this little known program. Most people, again, many lenders don't even know about it. And it's this existing program. It's called the Solar and Wind Technologies Program. And it allows an FHA buyer to finance a solar system into their mortgage. And that might not sound exciting now, but
We get excited about it, but
Yeah.
it's not that, if we say that.
yeah, so it's kind of there's this existing program, and what this program will allow you to do is earn up to 3.5%, right? Because for FHA you need 3.5%
Right.
down,
Yes.
capping at $13,000.
Right. You can't earn more than 13,000 on this program, but that's a good chunk of money.
Yeah, and to give like an example, again, it caps at 13,000. So if you were buying a $500,000 home, the program 3.5% is 17,500. The program would cap at 13,000, but then that's a significant chunk of the down payment
Right.
there. The nice thing, this screen alone is really unique because there's a lot of programs out there. A lot of people are interested in down payment assistance programs,
Right.
but they're very specific. They'll only help you with down payment in those types of programs for the most part. They're really restrictive. This program is not like that.
Right. On a normal down payment assistance program, they're very restrictive on what you can use it for, and they're restrictive on who can qualify, and they're restrictive on what the interest rates would be.
Mm-hmm.
There's a lot of restrictions to them.
Yeah, because you mentioned interest rate, for down payment assistance programs, typically they'll give you a bunch of money up front, but the interest rate is so high that the monthly payment is so high that you might not even be interested in it. The nice thing about this one is it's just whatever the normal FHA rate is.
Right.
And then some of the things that can be used for to go down through these. So you have the down payment, going back through that formula, down payment or closing costs. This is pretty unique. Debt to pay off at closing. So if you have credit cards or student loans or car loans or things that are holding you back from qualifying buying the home, you can use it for that.
It's interesting. I like your slide. It says earned funds. So this isn't a gift. You're
Right.
earning it.
It's not down payment assistance. You've earned the money.
You're earning the money by going through this program, and we'll discuss that a little bit. Yeah.
So again, it covers a ton of different things. The twist is, and my dad mentioned this, is you earn the money, and really it's the easiest $13,000 I've ever seen someone make. You just go through a 6 to 8 hour course, which a lot of first-time homebuyer programs, normal programs like conventional or FHA, they require you to go through a course anyway, so you know what you're getting into, because buying a home is taking on a major debt, and they want to make sure you're a responsible owner, but also the lender wants to make sure that you can pay back the debt. And so there is pre-closing homebuyer education, there's post-closing financial mentorship, and then you get the solar panels added to your home, and there's some periodic follow up. This program is also kind of a research study to see
Right.
how beneficial this could be, and they want to make it even bigger, but it's kind of starting with a small
Right.
niche group.
Correct.
So to go through it, the solar panels get added to the home. There's not a lease for the solar panels. It's all together with the mortgage, and so you own those solar panels, which is nice. And then there's actually a credit that you can get when you do your taxes for having this type of program. And they on the bottom here they say the average credit that you get is around $9,000 to $12,000. I think it depends on how many solar panels you're getting added and maybe the property value of the home. But
Right. We just kind of jumped into this. This program is a solar program. It's a study, and so part of it is if you don't like solar, then this program is not for you.
No.
But if you're okay with solar and keeping your payments the same as what they would be with or without solar, because the solar panels give you a discount on what the utility bill would be. So this then becomes a great program.
Yeah. So you save on the monthly payments with the utility bill.
Right.
And then you also get this $9,000 to $12,000 tax credit when you do your taxes later on. And then you get that $13,000 up front.
Right.
One thing we got to make sure we cover is ineligible properties. Those would be condos. The reason why, and you've explained this to me greatly, because I was always confused with it. The reason why is when you buy a condo, you own the inside of that building. You don't own the outside of the building.
From the ceiling, the paint on the ceiling down to the floor, and the paint on each side, the walls, you own the inside of the building. The actual building you don't own. And so you don't have control of that. The condo association has control of that.
Right. And then this last bullet point, this is to me the coolest thing about it is they have this renewable energy assessment. And basically to get the solar panels, it will increase your loan amount, but it has to be offset by how much you're saving in utilities. So if it's not financially beneficial to you, you can't get this program. So it's really trying to protect people, and make sure it's a good fit.
Yeah, and a lot of people are saying, "No, wait a minute. We have to add on the cost of the solar, but our total payment doesn't go up." And I go, "Yes, that's the plan. You add on the cost, but your utility bill goes down and your mortgage payment goes up. It should equal out it being the same."
Right, and that monthly housing payment. So I ran through a scenario again. We've helped out 2 families. It's going to be 3 soon. And this is an example where I helped a family. They're buying a $372,000 home. 3.5% down was the $13,000. And so to run the numbers, this is what it looked like. Now going from top to bottom, real quick. That's the monthly payment. We're assuming taxes. We're assuming insurance. We're assuming HOA. They weren't looking at a specific home, but I wanted to make sure that they understood that those are fees that they would incur monthly. And then you'll see the loan amount, it gets increased by whatever the cost of solar is. On a loan that we previously closed is around $40,000. We've got another one live right now. It's around $39,000. And then the nice thing is if you go to the very bottom, the estimated cash to close, how much money they need to bring in at closing was around $7,694. And so this is where this is going to get a little, if you can follow us. So we've got this solar program, but there's also things going on in the local marketplace that we can combine these two forces and make it beautiful. And so that's where we get the zero down and zero on the closing costs.
So you're going to talk about seller concessions.
Seller concessions,
Yep.
yeah. If we get someone to help cover this lower, or lower what the buyer has to bring in at closing, we're in this perfect Venn diagram of sellers are giving concessions, and then we've got this lender program that can help with the down payment. And so to review real quick, seller concessions is when the seller's struggling to sell their home. They will give a concession, which is a lump sum of money, and you can use that to either cover the closing costs, so the cost to get into the home, or to lower your monthly payment after you're in the home. And so I'm talking specifically about covering your closing costs in this scenario. If the solar program helps with the down payment, the seller concession could help with the closing costs.
And real estate community here in Arizona is getting pretty smart. They're making offers and they're asking sellers to pay concessions to help. And so a lot of these people are saying, hey, I've got all these offers, and they're all saying, would you help pay concessions? And so many of them are accepting those offers.
Yeah.
We're seeing that.
And again, I've got a live scenario right now where between the seller concessions and the down payment, my borrowers won't spend any money
Really?
out of pocket.
Nothing?
So I mean, you got to pay for the appraisal up front
Right.
and the home inspection.
Okay.
But other than that, they're just going to have a home and a monthly payment.
So less than $1,000 they're in the house.
Less than $1,000 you're in the house.
Wow.
And that's the local market. And that I can't preach it enough. For the last 15 months, over a year, 50% of homes sold have had a seller concession.
Not unusual here.
Yeah, so this is a huge opportunity for people. And so the one question we get a lot from people is like, well, should I wait until interest rates come lower? I can't predict the future. I don't know when interest rates are going to come lower.
We thought they were going to be lower a year ago, and then it didn't happen.
Yeah.
Well, it did for about 2.5, 3 weeks, and then it went up again. So we're in a crazy market. Things are still up in the air. We think that rates will drop, but I'm not saying next year. I'm saying maybe a year or two. I don't know.
Yeah, we don't know. But what we do know is that sellers are giving concessions.
Yes, we do know that.
And you can always refinance into a lower rate. You can't somehow magically buy a less expensive home.
Well, the other thing is, if rates do come down,
Yeah, this picture right above.
2020, 2021,
What happened to home prices?
prices went up.
Prices
And
went up.
people are saying, hey, waive the inspection, we just want to buy it now.
I'll spend $10,000 extra compared to this guy because now you're competing.
Yeah, everybody had, hey, I put in an offer and I'll pay $1,000 more than whatever other offer you have. So here's my offer, and I'll waive the inspection. I mean, it was crazy. So now you can get in, you can inspect the home, you can see what you're buying, and still get a good deal on the price.
Yeah. And again, the thing I would point out is buying the home right now, we know interest rates are high. We know the monthly payment might be uncomfortable.
stretch.
And if it's too uncomfortable, then, we're not saying buy the most expensive home or something out of your budget. But understand that this is probably going to be the most expensive payment you will have while you own the home, because as rates come down, you'll refinance into something lower.
Right.
So, but you won't always be able to get help from the seller.
And I definitely think they're going to
home.
come down. I do. I believe that. I just don't know if they're going to come down in 6 months or a year, or what that time frame is going to be. But
Right.
I think they're definitely going to come down.
And again, as they come down, more bids will come out, and sellers won't be wanting to give help. Instead of them saying, yeah, let me help you buy my house, they'll say, okay, well, let's compare all these offers and see who's going to give me the most. So again, this is like the summary of the program. We got down payment, we got closing costs, and then total cash close minimal. And so this program, it works. It's not going to last forever. I don't know if the funds will run out. I haven't heard anything about that. But as the market shifts, as interest rates come down, then the seller concessions are going to disappear. And so we just want to make sure you're aware of that program now. And if you have any questions, please don't hesitate to give us a call.
Start your home quest.